10 years of Lehman, and you have categorically stated that you don't believe the next financial crisis is going to be linked to the banking system because enough checks and balances are in place. JPMorgan says that by 2020 we could expect another financial crisis. Where do you see the vulnerabilities today?
Yeah, I would say not say financial crisis. You're going to have another recession one day, and that will cause problems in financial markets. That's a given. A financial crisis, we had panic. And people weren't they weren't lending to corporations anymore, lending to individuals anymore, and so that was slightly different. The banking system is very sound. In fact, I always tell the regulators they'd be taking a victory lap. Lehman wouldn't happen today. Lehman would have had 2.5 times as much equity capital, 2.5 times as much debt, 2.5 times as much liquidity. The regulators had the legal authority to take it over and have an orderly unwind. It wouldn't happen today. So banks in the United States, more capital, more liquidity, more transparency. Most of the loans that put on the balance sheet are pristine. Losses will go up or down based on a recession, but if you ask what are the things, well, I think trade is a little bit of a negative. QE is a question mark. Obviously you should be concerned about that, but it won't be a banking crisis.
So where do you believe that we find ourselves most vulnerable today? If you believe that the banking system is much more secure in comparison to 2008?
I think the most biggest vulnerability is cyber. Just for everybody. I think that we have to focus on it. I think regulators have to focus on it. I think the United States government has to focus on it. I think we have to make sure, because cyber terrorists and cyber countries, and that they can cause real damage. And we're already spending a lot of money, and JPMorgan is quite secure, but we should really worry about that. Electrical grids, airplanes, financial systems, clearinghouses. I would put that as the highest risk. And that can obviously
so that would be the #1 risk on your dashboard?
Yes.
Yeah? What would the other 2 and 3 be?
The 2 would be if inflation goes higher in the United States and the Fed has to react a little more aggressively in raising rates. I would put that more in the category of a traditional raising rates, which can cause a traditional recession. And you're going to have one day, and obviously that will filter back into financial markets, but hopefully it's just a modest to mild recession.
I go back to my question on how the equity markets in the U.S. have pretty much shrugged off concerns on the trade front, and you believe that's because it still is a skirmish and not a full-blown war, and you believe that it won't escalate into a full-blown war. But what do you see in terms of momentum? Do you believe that the bull run that we've been in the midst of has more legs, has more steam? I mean, people have been writing premature obituaries of the bull run for a while now.
Well, yeah, but the United States grew 20% over 10 years. It really should have been closer to 40. And some of these new policies are accelerating growth. So in some ways, the recovery is long. It's anemic, it's getting stronger, people are coming back to the workforce, the financial system is in great shape, housing is short supply, confidence is very high. So I don't really see the potholes. Like I said, there'll be a recession one day, but I don't see the immediate potholes. So if you postulate there's going to be fairly decent growth for a couple of years, that means earnings are going to be going up. That means even if interest rates go up and the earnings risk premium comes down, these stocks can grow into their current valuations. If you postulate on the other hand that we're going to have a recession tomorrow, obviously everything's overpriced. But neither you or I know the future.
No.
And I think guessing too much about it is a little bit of a waste of time.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.